What's up, guys? Welcome back. One of the biggest mistakes that new traders make is not knowing when to trade. It's important for you to understand what time does the session open, what time does the session close, and when is the session the most volatile. Trading at off-peak hours, well, that's like trying to catch a plane at 3 in the morning. You're going to lose money quickly trading at the wrong hour and with no volume. On the first page of our site, we list the London, New York, Tokyo, and also Sydney markets. We prefer to trade in the London into the New York session, which is when we actually send out our most active signals. The markets do have what we call the rest period, with annual national holidays coming into play. During these times, you'll see no activity. The best time to trade Forex is when the markets overlap, such as London into the New York market, just to give you an example. You'll see the currency pairs that you're trading are actively tied to both sessions. During the day is also when you have the most political and economic news coming out, and that's also going to affect your prices and the volatility. So, know when to trade and when to take a break, and maybe catch up on your charts, your research, or, by the way, maybe get back to your family. I know they probably miss you, okay? The second mistake that new traders make is not understanding support and resistance levels. And it's fair to say that we've all heard the saying, buy low, sell high. The easiest way to quantify these levels is by using the area where the price stops and changes direction. When the price stops after moving in an upward trend and then reverses, it's known as the resistance. Okay, so on my chart here, we're clearly mapping this out for you. At these levels, there are traders who are just waiting to sell because they know how much power it took to push the price lower. Then you have the buyers who bought at the support and they're just riding it back up to the resistance where they plan on taking their profits. And then we also know there are traders who got trapped buying at the resistance levels, okay, right before the price fell. So they're just praying that price comes back so they can either break even or just call it quits. Now, all of these groups are working to send prices lower because there's too much supply. Think of it this way. The more supply you have versus demand, prices will fall. And yes, I understand that knowledge that I'm telling you right now is just common, but this is how it applies to your trading. So, know how to spot the support and resistance because you're going to always hear everyone talking about them when they're trying to prove their point on why they think they have the best research in the world. And as always, guys, if you like these videos, give us a thumbs up, subscribe to the channel, show us some love and some support, and I'll be back with you with another video coming up next.